Understanding the Equity Ratio, a guide for English language learners. Hello, and welcome. Today, we're going to unpack the term equity ratio, a phrase often encountered in the world of finance and accounting. Whether you're a student, professional, or just curious about financial terms, this video will explain equity ratio in simple English. The equity ratio is a measure that tells us how much of a company's assets are funded by owners' equity. In simpler terms, it compares the total equity of the company, money from shareholders and profits, to the total assets, everything the company owns. This ratio is important because it indicates the level of financial health and stability of a company. To fully understand the equity ratio, we need to break down its components. Total equity. This is the amount of money that would be returned to shareholders if all the assets were liquidated and all the company's debts were paid off. Total assets. These include everything the company owns that has value, from cash and investments to property and equipment. Calculating the equity ratio is straightforward. The formula is equity ratio equals total equity, total assets. Let's look at an example. If a company has a total equity of $500,000 and total assets of $1 million, the equity ratio would be 0.5 or 50%. This means half of the company's assets are financed by its shareholders' equity. The equity ratio is a key indicator of financial leverage. A higher ratio means the company is less reliant on debt to finance its assets, which is generally seen as a sign of financial strength. Conversely, a lower equity ratio might indicate higher debt levels, which could be riskier for shareholders. While useful, the equity ratio has its limitations. It doesn't provide information about the company's operational efficiency or profitability. Also, it's crucial to compare the ratio within the context of the industry, as norms can vary greatly from one sector to another. Understanding the equity ratio can give you insights into a company's financial structure and risk profile. We hope this explanation clarifies what equity ratio means and why it matters. Thanks for watching, and we're looking forward to seeing you in our next video.